Morning guys, Johnny, Mr. Forex Fire. So today is, let's take a look. It's February the 22nd and it's Tuesday. It's currently just before 9 a.m. and we're going to have a look on the harmonics again this week. And then I'm going to decide whether it's going to be using the fire harmonics or whether we are going to be using the fire pitchforks here. But we'll have a look first of all. Just going to share the screen and we'll see if we can get set up. There's one, just to save time and sort of talk through everything. I've just been looking at one at the moment. It is USD JPY. We're using the HPV2. We're just going to get rid of the tables to get this on. So we've got the red bar, okay, we've got the red, okay, it's the red one we're looking at. So we're coming down from here. So you've got this to here, big harmonic pattern. And we're covering that. I'm just going to get rid of the outline on that, okay. So what we've got X, A, B, C, D. Now, one of the first things I would generally do, because these will always give 50% back of the pattern. Okay, so we've got the red line. That's what I'm aiming for. The text, 50% of pattern. We'll make that purple. We'll drop it down to about 14. We'll put that to the right. Okay. Let's put the pitchfork on. In fact, I'll tell you what we'll do. Let's take a look. Let's do the fibs. So we're going to go from the D, one candle to the left and its wick. Okay. Let's drop down to 15 minutes. And we can see we've already come out and we've come in and we've had an entry. So, shame. Absolute shame. Work to perfection that. Let's just see what the risk to reward would have been on this. That would have been your entry. That would have been your stop. You could target a 50%. That would have been a 1 to just under 6. That is a shame. That is a shame. So now what we'll do is we'll change it over to. Just going to move that across to there so we know we've got the entry on that. Okay. Swap it over to the Heiken-Ashi candles and we'll try and work it around this way. Let's get the pitchforks on. X, C, D. So we've just missed out on a fabulous trade, in all fairness, based upon the fire harmonic system. So we've got the Heiken-Ashis, which are trend-based candles. Put the whole suite on. We've got the sell. We haven't quite got the buy at the moment. 15 minute. Just to drill it down, we've got the 15 minute. Okay. But from there, what we'll do the pivot points. Okay. So the pivot points, what I mean by, instead of the fans going up in a diagonal line, we can do the horizontal. Okay. So we've got one here. We'll do these black. And there's the 50% of the pattern more or less comes on here. And we'll do one just above the medium. Okay, we'll do one on there. So that there is generally our buffer zone. These two here will be our buffer zone. Okay, just take, we'll get rid of that. Get rid of that. It's going to draw another one because I had the pencil on. I'll get that. We'll do that one orange. Right. So let's drill a bit closer in here. So we've had the buy, okay. We've come out, we've tested the area, and we've gone to the next sort of level. So we've more or less missed the trade on that at 15 to 16 pips. Let's go on the Pepperstone. 315 is the one that we use, okay. That's the one that we use for the Pitchfork area. From there, I think what I'll do, guys, is because we're right on the money now, okay, I'll enter a trade here. We'll enter a trade here. Let's take a look. Why is it rejecting? So we want to risk 0.25, okay? So the lot is going to be 0.26. And we're getting this again. We were getting it the other day. Okay, we'll do 0.2. Right, so stop loss. We're going to keep covered to the zone, okay? The take profit, we'll take up to the 50% of the pattern, okay? So we're just going to do that. And we'll do one where it comes into deeper. If we come back down to this area here, the last level, we'll put in a buy limit, so we're getting deeper discount. What size is 0.2? Okay, we'll have our stop loss again, same area. And the TP, again, will go to 50% of the pattern. Now, the reason why I'm doing that is I'm staging in the full lot size that I would normally do, just to go over that again. So instead of having an entry area and having the full risk of a 0.3 or a 0.4 based upon that one area for it to go into drawdown and possibly take off, we are anticipating the entry, which is split. Okay, so we come here, hit entry one. If we hit entry one, have a little bit of drawdown and then go to take profit, it's still happy days because we've hit the take profit and nothing has been lost. However, instead of putting the 0.5 on that one area, we put a 0.2. okay, so it's triggered from that entry there straight away. If we go into deeper drawdown, that stops down here. If we go into deeper drawdown, we put the heavier 0.3 out of the two on the bottom, so there's lesser sort of area on the bottom to attain a heavier loss, if that makes sense. So if we trigger 2 points and then it shoots off, you're just getting a deeper discount at the price. It's a smarter way of trading, to be fair, and a better way of trading. Rather than putting everything on that one level, you can anticipate that D point or the harmonic area is going to hold structure, because that's what they should be doing. In essence, there's a percentage of a chance where that structure will sort of tend to hold. We have our buffer zone, and then we are waiting for the trend reversal from the D point. So we sort of edge in our areas of resistance and our areas of entry as well. Okay, so I'm just going to share the screen. I'll pause the video in a minute and I'll talk about something in a second. So again, we're on the buy at the moment. There's a little bit of drawdown at the moment. We've got a buy limit here. I'm possibly going to set, let's take a look. We'll set another one here. Let's get our stop losses. Okay. And the take profits. Let's have a look. All right, so we've got the 50% as a rundown. We've got our 50% of the pattern. Okay. We've got our levels and pivot points put in. All right. These could tend to go to a median line, to be fair. However, there's a lot of hoo-ha about it at the moment where they'll see a 50%, 80% will go to the medium line. I don't roll with that. It does not do that, to be fair. I'll always use 50% of the pattern. Okay, 50% of the pattern is much better and much greater. Again, I'm not worrying that this is in drawdown. Just if we touch into here, what we're going to get is a deeper discount. Again, we'll just anticipate that this is going to hold structure. What has happened anyway that we can speak about is this area here has beautifully touched in to where the 25 area is. Okay, so we could put one more trade there, and we'll have a 0.10 on this. Okay, and we'll have the stop there, and I'm going to take profit up to here. Okay, there we are. And that's it for my trades for this morning. I'm just going to use one pair, one harmonic pattern, and obviously that one system. A little bit good we didn't get into this. We just missed out on this morning. But again, this ended at around about 3:30 this morning. I would never have been up, so there's no loss on that, to be fair. So what we'll do is we'll pause the video and we'll be back a little bit later on, maybe a couple of hours, just to see where we are and see how we're doing. We'll try and keep this video short today, but that's what we're working on preference wise. I would be anticipating a move to come back down to test these sort of areas. So obviously you've got your swing point from here. So you've got a low, a higher low, a higher low. Okay, you've got a high, higher, high, higher, high. So we are anticipating a move coming back from that structure point of the higher high to come down to create a lower low, whether it's on this area or whether it's deeper on this area, to then possibly take off. Okay, if this sort of break structure and this break structure, we can then anticipate the 25 to be hit. Okay, so if that was to happen, we might actually get a breakthrough of both of these areas of where there could be a lower low, and it might test here to push up. Okay, all that means is when you're looking at this on a 15-minute chart where you've got the waves, okay, what that means is when you go up to the hour, that might be a 1 hour candle there, down to that being a 1 hour candle to that being a 1 hour candle. So we go over that a lot within time fractal nature and intermediate price action, if that makes sense. There's a lot of that in the Discord, guys. If you want to know more about that, have a little look on the Discord channel. If you're not in the Discord channel, just reach out, comment, like, share, and please subscribe to the channel. I'll be back in a short while and we'll see what we're doing with price on this today. Okay, I'll see you in a short while. Hi guys, now as you can see, we spoke about getting deeper discounts. Prices now came into halfway, exactly halfway of the levels of the pivot points. That's where I've got my sort of first discounted area. It's bounced off that and it's starting to give some nice profits. We could be anticipating a move deeper onto the lower level, which is where I've just put the next sort of discounted buy at. And again, this is not going to be going into heavy losses because I'm splitting up the usual lot size or the usual 0.7 or 8 that I would be doing. I've just sort of anticipated and staged my areas of entry a little bit lower down. The take profit area will always be the same sort of thing. It just means if these come deeper down into the discounted areas, say like down to the third or the fourth, I can then start looking once it starts bouncing off these, maybe getting out a little earlier than what I was originally looking at, because once we stage into these areas here, if we do stage into these areas and we get the bounce and the rejection off there, then we're going to be getting some nice profits, and it would pay for the higher entry, if that makes sense. So there's method in the madness with it. So far, yes, we're in drawdown on this here, but we got the deeper entry. And again, this is the equity profit loss at the moment. We are actually in profit at the moment, you know. So hopefully this is just letting it sink in on just how good being able to sort of look at your swing points, look at what your areas of resistance are. Like we've identified structurally the harmonic pattern, then we've got our buffer zone on the bottom. We've got our buffer zone at the stop loss here, okay? So even though we have got a higher entry, okay, and then we staging in discounted areas just below, we're just structuring in the whole of the lot size that we would have just generally put in here, and we're putting them at lower areas, just so if there is a bounce off on the lower areas, you've got a discounted entry. That's all it is. You're not risking any more than what you would normally do. You're just factoring in the chances that it could come deeper into play within that structure point. I hope that makes sense. Again, we are in some good profit, few quid profit, you know, straight away. Hopefully, on this one here, hopefully we'll just get the straightforward bounce off that area, then anticipating to go to the 50% of the pattern, okay? Again, I'm just going to pause the video out there for now, and we'll jump back on in a second just to show you exactly how we've done today and then going forward on that. So I hope this sort of way of trading is sort of opening your eyes, and if you have any questions, please drop them in below, okay? I'll pause the video. We'll be back in a second. So as you can see, we spoke earlier about being in profit, okay? So this is where we started this morning. We started the account with a 10K account, steadily looking at growing the bits of profit. Yes, it's not a massive amount, but each day, if you can get around about a tenner a day, and you can build upon that. With business, let's looking at it from a 10K challenge point of view with, let's say, FTMO, and I spoke heavily in the last video about, instead of looking at it at being 10K, you need to flip it on its head and look at what your drawdown is and work your parameters around what you can lose on your daily drawdown, which on the 10K challenge on FTMO, you have a $500 or £500 daily drawdown limit. We need to factor in the percentages that we're risking based upon that size rather than the 10K. You'll be in the game a lot longer doing it this way, and factoring in the way I'm working this as well, what I'm telling you about where you're anticipating these levels within the harmonic side, okay, and coming into a deeper retraction area where you've got like these lows, the higher lows, the higher lows, the higher lows, and then you're waiting for the pullback. You're entering at certain sections within the pullback area, okay? Yes, I'm in drawdown here, but we anticipated a 50% bounce off, which we got. It started to move back up, and we are in profit. Now, we were nearly £10 in profit before, okay? Now, normally, on what we're using at the moment, I would be happy between 10 and 20 pound a day to do that, to build a pot, okay? But for today's purpose, I'm going to be willing to risk everything that we've got on there, okay, and just seeing what happens on the play out. See if we, yes, we've got 2 entries at the moment. See if we get the 50% of the pattern completion, which is the B point, okay, the X, A, B, C, then D. This is the B point. It's the halfway point of the harmonic. There's a good chance that it will play to this sort of area they normally do. So instead of just taking the profit, I'd be happy closing that profit out right now, okay? So what we're going to be looking at, we can see, yes, we've had around about 8 or 10 pounds worth of profit at the moment. There's only around about 3 at the minute. I'm going to let this play out. I've got to head off out in a moment. I'm going to come back and see where we are. If it loses, it loses. It'll probably be, if it does lose, in all honesty, if it tanks right the way through to the stop losses, yes, we will we will be eating into the 10K, okay? But if this does play out, whether it's from these two that have entered now, we would be in really good profit. If it plays down into the deeper discounted areas, then it retraces back up to the 50% of the harmonic pattern, we'll be massively in good profit, okay? And we'll talk about what the outcome is at the end, whether it is that winning or whether it is coming through the stop loss. We are willing to risk the breaker structure of the harmonic pattern to come to the stop losses. If it does, it just means we've learned the lesson. We know that there was just going to be a continuation on the downside. When we're looking at this, okay, we're on the 15-minute. We talk about intermediary price. You've got a high, you've got a low. You're now starting to get a swing point at the moment. So if I was to do this from here, okay, and start pulling this up to here, just keep an eye on this down and up. If we go up to the 1 hour, okay, and you can see there's not many sort of ups and downs. If we go to the 4 hour, a little bit noisy, you can see most certainly that's where that swing legs come from. So on the 4 hour, we're starting to get a push back up into the intermediary price areas, okay? So again, this is where we've ended. The 4 hour swing leg has just been dominant with a downtrend, okay? We're breaking it structurally down, fractal wise, down to 15 minutes and things like that. We're now heading back up towards what, £5 worth of profit. Again, I would be happy to close that out for the day, but I'm going to sort of let this structurally play out and then see what we can get from it from an overall standpoint. That yes, this was an entry, this was a deeper discount, this was a deeper discount, this was a deeper discount. This is where if we were to lose, we understand that the structure was completely broken on the harmonic pattern. We've learned the lesson from that. Yes, it means we would possibly be eaten into the 10K, but we are anticipating these moves from a higher time frame concept push down. We are using the Hull strategy, which is telling us pivotal points where we can get in and out. We've got the pivot points on the pitchforks were levels, okay? You can see from here were levels. This one here, this level down here, the buy limit on the 25, if we were to use the fire harmonic entry system, which is the breakout of the swing point, return back to the 25 area, it beautifully touched in here this morning, but that was at around about 3 a.m., half 3. That's given around about a 30 pip sort of structural move. That would have been, I think it was a 1, was it a 1 to 6, was it, or a 1 to 7? I might have to look back on the beginning of the video to see what that was. But at this time, where I'm going to pause the video, we are in some good profit, okay? Yes, you might look at this on a 10K and you think, well, that's not much profit. It is. It is good profit because we are basing it on the fact that we are only using this, even though it's demo, as a 500 drawdown system, and we're just getting pennies. The pennies will look after the pounds, and that's the way we need to look at this, okay? And it's the way I'm sort of structuring this out and doing it play by play each day. And I hope you're taking some little bits of useful information out of this, okay? So I'm going to pause the video. We are in good profits at the moment. It's starting to have a little bit of a pullback to come to where we were at the beginning of the day. We're going to let it play, and then we'll have a finalization at when I get back this afternoon at some point. So I'm going to pause the video and we'll be back in a second. Right, guys, so just before I head out, just to show you, we are now heading into good profit on the premium entry, as we would call it, and the discounted entry. We're now a good £15 in profit. Again, I'm just about to head out. I'm going to sort of let this run its course, see what happens, see if it actually sort of blows out from that structure point and sort of knocks us back into just under the 10K, or we can see if we go up into the take profit of the 50% of the pattern. But as of sort of pausing from this point, we can see we're a good £15 in profit. Okay, so we've doubled the profit from what we have done over the last few years. So a good healthy £15 profit. We'll see where we are when I get back in later on today. I'll catch you in the next screenshot. I'll see you in a bit. Hi guys, so as you can see from here, okay, we are in great profit. We're heading up towards the 50% of the area, okay. Just make that a little bit bigger. As you can see on here, we're heavily in profit now. So I'm just going to close it out for now. I'm not going to let it run through. So we'll close those profits out for now. We started on £14 of profit. We're now in the 40s. So let's close this out. And we'll close out the buy limit as well. And then we'll have a chat. Right, so as you can see there, we're now £40 of profit. I'm just going to stop the share and get my head that little bit bigger for you guys. Right, so yeah, there we are. So talking about staging and things like that. Okay, let's see if we can get a whiteboard on as well. Let's have a look. Right. Can I get a whiteboard? Share screen, whiteboard, share. Right, so hopefully you can see me on the whiteboard here, okay? So yeah, what we're looking at basically is we get the drawing tool on. We come up, we come down, we've came up, we've came down, we've came up, okay? So we've got, in essence, we've got higher low. We've got a higher low. Obviously, you've got a high, higher, high. Okay, and excuse the writing. And then you're going to have a higher high, okay? You've got your harmonic pattern. This is where the pattern came down to, okay? We'll just do a triangle, and we'll just color that in, okay? So that's your harmonic pattern. We're expecting price to push up on the trend reversal from the D point, okay? Now, what we were anticipating is we had our area here, okay, which was the D point, then we had our buffer zone, okay? So this here is the area that we're allowing price to break through to, and then if it came to here, it would be our stop loss, okay? So as we've got the 1 hour time frame, on here, you're breaking it down to either a 15-minute or a 5-minute entry, okay? So what happens is, as this is the 1 hour, okay, as this is the 1 hour, okay, within this area, you're going to have intermediary price creating these higher lows, okay? And they're going to form structure points within those on supply and demand, okay? So you've got a supply and demand here, supply and demand here. Then you're structurally coming up intermediary price, apologies. And then again, you've got your structure points within that, okay? So when we are going to sort of head, let's just take a look. When we are going to sort of head towards this area here, okay, which was the 50%, of the pattern, okay? This was going to be the 50% of the pattern, okay? Well, we're anticipating a move up into this area. So from there, what we're doing is we're waiting for price to sort of come into structure points, either from the retracement from a higher high to where the previous higher high was, or where the higher low is, okay? So structure-wise, that's what we were looking at. So normally when we await a bounce, okay, let's just take a look. Normally when we wait for the bounce to come down to then let's have a look, to then continue up, okay, we have got an entry there, okay? Let's just have a look. We would normally have an entry. Let's see if we can get this right. We would normally have our entry in there, okay? So in this instance, we were possibly looking at a risk of a 0.8. Let's see how he's working on a 0.8, okay? So text in. So as we have a 0.8 size to work with, okay, we have a 0.8 size to work with. So instead of having the 0.8 entry on here and having the stop loss all the way down to here, okay, and then having a big risk to reward on that, or a big SL, we are going to stage in, okay, what will happen is we're going to stage the 0.8, okay, and what that means is you're going to be looking at different areas underneath, okay, we're going to be looking at different areas underneath where you've got your higher low here, and you're going to do a 50% as well from that previous swing point. So as price is coming down to here, you're possibly going to use a 0. I don't know, let's say a 0.1, okay, for the first test, a 0.10, okay, because you're going to have a deeper dive area. So that would be known as your premium entry, okay. So that there is your premium, you're testing, okay, it's your premium test point. Now what happens is if price continues to come down, breaks through that 50% of this initial sort of higher low to higher high, if price comes down, breaks the 50%, continues down, this 0.1 will be in a little bit of drawdown, but then your next supply or your next demand area, I should say, your next demand area is a structure held within that higher low, okay? So as price drives down, you may put a 0.2, okay? So that is going to give you basically your discount entry, okay? Your discount entry. Let's just have a look at this. Pressing the wrong button, do apologize. This is giving you your discount entry area, okay? Now, as we go deeper down, you're just going for either 50%, okay, or you're going to make a decision that you're going to go for the previous higher low. And as price drives down, okay, you're then going to be using what you would have been having on here. You've still got a 0.5 to use, okay? So then as you've come deeper down into this, you've got a decision to make. Because you've used a 0.1 and you've used a 0.2 out of what you would have overall used of a 0.8, okay? That's a 0.3 that's been used. It's giving you a 0.5 left to play with, okay? Now, as you've come down, as you're driven down in price, okay, the more you come down, the more discount you're going to get. Your risk to reward is going to get better because overall, this here is the structure point, okay? This is a structure point that's holding. We are waiting for a trend reversal. So again, as you come down, when you come down to these like sort of high lows and you're getting nearer towards the D point, you can then make a decision if you just want to go for another 0.2 or 0.3, or you could go for that 0.5 in the preference that you're going to be holding the risk to reward on the bargain basement, as we will call it, the deeper discount, for then the price to come up to attack the 50%. Okay, let's get this. That's supposed to be 50%. That should be a percent marker. Okay, the 50%, not 505, 50% of the overall pattern. Okay, so I hope that makes a little bit of sense. What we're doing with this is we're staging in what you would generally have risked. Okay, so in this instance, we were looking at possibly around about a 0.8 today. I had a dip in the toe in the water. It's going to be a premium price. Okay, it's what we would call a premium test. Put in a 0.10. Yes, it come into drawdown, but as it come into drawdown, we hit the second entry. So we started putting a little bit more money on the table, and we weren't risking too much simply because this is what we were looking at overall. We were then just out of the balance that we were going to use for the day. We were just looking at from that second entry point, we were still just using the 0.2 I do believe. Okay, so from that, I'm just going to stop the share on that side of things. We're going to share the screen on the desktop. And when you look at this overall, okay, yes, I was looking at possibly around about a 0.8 overall. We staged everything in, but we only come in from the premium price where we're dipping the toes to the first discounted area. And that first discounted area, we barely touched into the 0.8 overall. Well, I think we put a 0.2 in. We come back in from the second bounce entry area, and we've more or less doubled. In fact, we more than doubled the profit that we've done over the last few years. So we staged into those areas. Again, we didn't have an overall. What I'm getting at is we didn't sort of put all the eggs in one basket with that 0.8 on that first entry area. Okay, staging these things in, it's what we would call a smarter way of trading. Okay, you've heard of smart money. This is smart trading, to be fair, and factoring in these things in conjunction with the pivot areas. Okay, you've got your areas on the pitchfork coming up. Okay, yes, you'll get tests and things like that on here where price will test. I'll just get rid of the noise and I'll just show you. I'll get rid of that. And if we go back onto regular candles, okay, what you're going to see is price is when you do the pivot points from each area of the pitchfork going up, you're going to see that these areas will be respected very, very well. Okay, and that's what's happened today as well. Some good profit on there. Hopefully this has made a little bit of sense today. Okay, it's been a good session. In all honesty, I just need for some reason me get this ejected in. Right, so yeah, so hopefully this session's been a little bit of an eye-opener for you and on how I'm looking at how I'm risking. Smart money wise, I would possibly factor in if there's going to be obviously a stop and an entry on a small pips. I wouldn't be factoring in this sort of way, but using the harmonics, using the smart trading method, where you're staging in entries based upon these areas here. Again, if we were to come down and hit the 50% of this area, I would possibly try and get in on another trade, to be fair, if the overall 50% of the pattern hadn't been hit. Okay, so I hope that's made sense for today. Okay, if you have any questions, please pop them in either the YouTube channel, or if you're not involved with the Discord, please click the bell, the subscribe to see more of these videos. Again, we're doing these to forward test everything. We've got other methods and strategies that we do within the Discord. I'll be moving on to some other things, I think, next week, because we're starting to get this in some nice profits. And it's just to show you guys that the system that we do and what we do inside the group, it does work. Okay, so thank you very much. I'll see you all on the next video.